already? Okay, good. Right. Morning to you, Susan Tan, and this is Terry. Morning to you guys. Okay, once again, good morning to you. Today is the 9th of May 2022, Monday. We are back again, right? We are back again. Now, this morning, when I posted this, right, the caption about crude oil going to $150 per barrel, right? Immediately, I get so many response from my friends around me telling me, Kel, are you crazy? Do you know that if the crude oil is going to 150, do you know how much our petroleum cost will be? And of course, I did share with them that, yes, I know. Now, last night, I was pumping petrol. Now, usually my full tank after discount is about $91 to $95 around there, yeah, full tank. But yesterday, when I received my bill, it's like 106. My goodness, it just went up by 10% without us really knowing it, if you didn't notice that, all right? And of course, there's some circulation about the recent prices. You can see, I should have that earlier, but never mind. It went up. The price went up. And we are now only at 109 per barrel. So imagine if the thing go up to 150, wow, I cannot imagine how much damage would it be for all the drivers in Singapore. And of course, if let's say my job is to ferry kids and stuff like that, if I had to take bicycle, I had to do it just to save some cost. But of course, for people who drive for a living, like Grab drivers, right, it will hit their purse. And also the logistic, the cost of transportation, the cost of sending goods to us. My goodness, I cannot imagine that. So all I can say is this, right, is do you think, in your personal opinion, do you think that crude oil is going to go to 150 per barrel? Please key your answer right now. If you think that yes, tell me, when do you think you hit? If they no, can you share with us why you think it won't hit? Let me know. I want to hear you guys loud and clear. All right. So while waiting for you guys to come to the answer, to give me the answer, it's all right. I take a quick picture of myself in my office, preparing for today. All right. Okay, Chong Ming say, I believe. Why? Chong Ming, why do you believe? Okay, Susan say no. They say government will intervene. Okay, fair enough. How about the rest? What do you think? Anthony say highly possible. Okay. How about the rest? Let me hear your answers. Let me see you guys responding this morning. Okay, Lionel says possible. How about the rest? Okay, I agree both of you, in fact, like all the ones who say agree and believe, and Susan too. I believe that the crude oil price will shoot up to 150. Yeah, I believe that. But yes, indeed, almost probably instantaneously, likely there'll be some intervention coming in and it will drive back this price down all the way again. This is something that I also believe. So later on, right, I will, yes, indeed, it's a temporary spike. Yes, indeed, I believe that, Jerry. So that's why I will share with you guys what I shared with my friends yesterday, last night, when we're doing a little bit of sharing about the market. Okay, so this MAO today will be easily 2 hours long from now, this very moment. I know that's again very chonghe to some people, but I really want to deliver something very important to you today. All right, there's lots of information. Let's begin, okay? Let's go. Now, first of all, we know that, right, we have the new John Lee in town. He will be the Hong Kong leader. All right, he's a pro-Beijing guy. So definitely itself, right? Some people will like him, some will not like him at all. It's very normal, okay, for that. Then, of course, we know that today, 9th of May, is a victory day for Russia, okay, because of the Soviet Union, right, battle back then itself. The question is, recently, Russia been quite quiet. So we don't know what's going on over there between the Russia and Ukraine war. And of course, we have traders all watching this very closely. All right. Now, before that, the self-disclaimer apply as usual. My job is to do market analysis for you. Your job is to make money from the market. Yep. Okay. Now, again, I like to start my day with the joke of the day. We can see that Wall Street joke of the day. Ha ha ha. All right. The Federal Reserve seemingly blind. The blind leading the blind. All right. Apparently, right, it seems that this joke is trying to say that the Federal Reserve is actually blind and they are actually trying to find their way out of this. And of course, to some traders, I think that, right, this is going to be very dangerous. But on 6th of April from Bloomberg, you can see that, right, does the Fed have to destroy the market in order to save it? Now, I already said this back in April last month. I already said this very clearly. The Federal Reserve will have to take out the stock market to let people go back to work. In fact, 3 months ago in January, I was already saying that, right, the stock market must come down so that inflation can be stopped and also people will go back to work. If you keep on basically building castle for people in the air, and of course letting people think that things is so simple and easy, then it's going to be very difficult for people to go back to work. And I said this long ago, right? Those who remember that itself, can you key the word REM? That means that you remember that I actually said that the stock market must come down. So with the stock market coming down a little bit now for the NASDAQ, down by 20% as well, right? It's still not good enough. If you ask me, the NASDAQ must follow a little bit like the Bitcoin, must be down by at least 40%. Then we can actually see most people just give up and go back to work. You need to create that problem so that people will just give up, right? Thank you guys for remembering itself. Fantastic. That shows that you guys are remembering what I say in MAO, and you guys know that, right? I said this before, that I already said that the market must come down for the market to really go back to normal, right? Thank you very much, guys. Appreciate that. Quinoa, Susan, Jonathan, Daniel, Chongming, Michael, Allison, Anthony. Thank you guys for remembering it. Fantastic. Okay, so remember I said this to you guys last week. I said that, right, to me itself, we are still at this stage here itself called the return to normal. We haven't really hit the fear yet, although seemingly it's creeping in, but it's still not there yet. Now, what is fear? Fear is when your friends telling you, you know what, hey bro, Kel, you know, I've been buying stocks, but the price keep on coming down or how. When you get to hear this, it's called fear. Then when after that, where people say, you know what, Kel, I'm going to cut regardless, I can't take it anymore, that's capitulation. Then we kind of despair, right? It's whereby people tell you this, you know what, Kel, I'll never get involved in the stock market anymore. Any recovery by 5-10%, I'm going to just get out and never swan to my life, never to trade again. When you hear this, that is called despair. So I'm getting a little bit of fear, a little bit only. Definitely nowhere near capitulation, nowhere near despair. So to me, it's all right. We're still pretty okay. All right. So that's why if you miss what I share on the 4th of May, can you go to our YouTube, find 4th of May, watch it yourself and enjoy it, okay? We have already updated it all thanks to courtesy of Susan, who actually been doing all the cropping and editing for us. All right, fantastic, Susan. Okay, all right. Now, the thing is this, I shared this on the 6th of May last week, and I said this, one of the bigger concern is the margin debt problem. Margin debt means that, right, people who basically buy and sell stocks based on margin. So they borrowed money, yeah? So once the broker have decided that the risk is too high, the broker will actually inform the client, top up more money, or you know what, I reduce your margin. So now you can see the margin involved here is almost twice as compared to what happened in 08. And 08 itself was already highly leveraged product trading. So now we are even more leveraged than before. What do you think will happen? So later on, when I cover about ETF, right, please take note of that. It's going to be very important. And it might be able to tell you why, in my opinion itself, right, the stock market may be going down lower. Okay? All right, so watch out for this. So yesterday, on the 6th of May, which is like on Friday, I reminded you guys, I said that S&P 500 was at 41.45, right? So I gave the first number. I said the S&P will drop down to 4096. Remember that? So those people who actually made money from the US market, right? If you have profited from the US market, key the word profited from US market. That means that if you have made money from US stock market, whether you long or you short, okay, I mean, of course it's short because I'm referring to sell, then key the word profited from US market. Let me see how many of you have profited from it itself last week. So for me, I gave the call, I say 41.45 is the current price. My target was 4096, and coincidentally, it's all right. I saw this number on the road yesterday. So what happened? If you look at it, we have people like I think Chongming made about $2,400. Congratulations, Chongming. We have Chris making about $353, and very good. We have Susan also spot on, right? She profited on S&P 500 at 4096. You can see that she really followed the numbers very well and profited about $139, right? You can see that, very good trading. And Brian also followed and made about $94. So all these really shows that students, or at least participants at MAO, listen and they really follow. All right. So congratulations to you, Anthony, Allison, Chongming, well done. All right, these are all real cases. Now you notice that, all right, many people do talk show, but not many people can get their participant to show that they actually make money from the market, and I managed to do some of it as well. That's pretty good, right? Okay, thank you very much. Continue. All right, so the thing is this, once again, guys, we had our internal event on the 30th of April, and now the video is already available, and people have came in and they want in, and I have been updating. So we have 95 initially, now we have more than 100 plus people, and they are watching it. But FYI, for those of my students, take note that today will be the last day I allow you to go into this group, because I don't want to keep on reminding you guys what to do. So, and this is going to be a short-term thingy, because if the Dow Jones ever hit 31,411, right? Once the Dow hit that point, we will just stop the whole thing here. So if you want to, come in early and get it done, please make sure you watch the video first, and then text me. All right, PM me. All right, put a Cal, I want in. Now after today, Monday 2359, I will not add anybody else in. Okay, this is very, very clear. Okay. So if you want to watch a video, it's available on TWB Revision Group, right? I have already uploaded the entire video, 2 hours video. You have to watch it so that I can bring you in, okay? Very clear. Inside the video itself is really a lot of very incredible stuff. Some people give very good feedback, say that, Cal, this is really incredible to see how you link 2 things together into one. Some of them say they are pretty lost because they think that, well, Cal, I mean, how can we use this thing in reality to trade the market? But you seemingly have nailed it. All these information are shared by students, and of course, they actually profited. Wow. Some of them really profited in tens of thousands, yeah. I know one of the students just withdrew $100,000 from the trading capital. Fantastic, guys. This is real students making money. That is the most important thing in our TWB Academy. Yeah, very important stuff. Right, incredible. Yeah. Okay. Let's give a moment. Let me take a quick picture on this, and then we move on. Yeah. Okay. Done. All right. Let's continue. Okay, so last week, right, we had the non-farm payroll figures, and yes, indeed, I was wrong. Yeah, okay, I was expecting a lower figure, and it came a higher figure. It was 428,000. No one won the $50. I don't think so. If you think you won, let me know. Yeah, because I checked through the entries. I don't see anybody winning it. But if you won it, that's all right, and I miss it, contact me directly. All right, I'm so sorry. Because sometimes the Facebook live comment may not be able to capture everybody. So if you want it exactly, please come and claim from us from the money. Yep. Okay. So this week itself, right? Let's take a look down. This week itself, right? We have a little bit lesser data. Monday, Tuesday, not much data. All right. Wednesday, we have the very important core CPI. Now, you can see that the core CPI data has been going down very nicely over the last few weeks and months. So it's a pretty good data to tell you that, hey, you know what? Things are better. But I cannot see how it is going down despite the current bullishness in the market in terms of the commodity prices and the US dollar. So I suspect that, right, it will be higher this time round. I suspect, yeah? So if it's going to be higher, and let's say go down like 0.6, oh my goodness, this is going to freak the market out. Now, the consensus is they expect it to be slightly higher, if not the same. Now, to me itself, I don't think so. I think it'll be higher than expected. But again, I can be totally wrong. So let's observe this closer, okay? Traders think of that, yeah? Let's get a minute. Okay, hold on here. Let's just give me a minute. Okay, all right, so that is what I'm seeing right now. Okay, moving along. All right, now this is the US Dow Jones on Friday. Okay, you can see that it was very, very choppy. It went down 200 points first, then it went up by 400 points, then it came down by 200 points, went up by 200 points, slammed down about 400 points, recover about 200 points. Oh my goodness. Seriously, the chart looks very flat, right? But no, my goodness, the range is ridiculous. The range is crazy. Now, why is that so? Because there are two camps fighting, the bull camp and the bear camp. The bull camp are all the ETFs trying to buy and average down, okay? There are funds still coming into the system. But the bear camp itself are people who got hit itself, they want to get out. So every rally, right, they take advantage of that to sell down. So this is really very scary, okay? This is nowhere near normal, yeah, nowhere near normal. So stocks fell on Friday to close out a tumultuous week. All right, let's take a look what happened. Now, do note that this is the first time for a long while the Dow dropped for 6 straight weeks, okay? All right, for the 6 straight week, they have already lost 6 weeks in a row. So the question is, what is happening right now? I think you have very probably heard it before. Now, basically, right, investors struggle to find a floor after a dramatic week that saw the Dow Jones posting the best and its worst days since 2020. Well, we saw the best day, right? The Dow Jones up by 900 points. That's a very good one. But at the same time, the market went down 1,200 points on the same day, on the next day. So that is where it got a little bit crazy right now. And of course, people are getting very worried because a 1,000-point move itself, right, it's really quite bad, yeah? Okay, so the thing is, I thought that the Jerome Powell and friends was okay, right? They ruled out a prospect of larger rate hike. That is good. But the market feel that, right, maybe a more aggressive rate hike will be better than actually, kicking the can down the lane, because it may actually prolong the problem. So now we have two camps. One is wanting it to go higher rates, one camp wanting to go lower rate. So now the question is this: the main one that getting hit is the technology company, because they are under severe pressure on the valuation and their interest rates and costing and stuff like that. And of course, now the best part is this: the NASDAQ is down by 25% from its all-time high. But the question is, how come until today, right, no Wall Street guys has even bothered to give the NASDAQ the bear territory status? Now, it just reminded me that how it happened in the game, in the movie whereby The Big Short, right? Where the S&P 500, Moody's, they are not allowed, or they don't want to give the rating first because they paid in a way to not to release. Because if they do that, it may the Wall Street may go to someone else and then ask them to reevaluate. So because of money and status, sometimes you don't set a CD. So in the olden time, when any market down by 20% from the all-time high, 100% you will hear the bear market territory thingy. But this time around, I really went through all the mainstream media and stuff. No one. They cover to tell you that, yes, the market is down by 20%, but they don't tell you that it's a bear territory. Do you realize that? How many of you realize that? If you realize that, it's all right. Key the word realize. All right. If you realize that you notice that the NASDAQ is actually at the bear territory, right? Key the word realize, yeah? That means that it's at 20, but it's below 20, it's already 20% off the high, but yet the market just don't talk about it. Incredible. Just don't talk about it. Okay, really. Yeah, realize that, yeah? So you can see how it works in the real life right now, right? Compared to what you watch in a movie, The Big Short, yeah? So since they don't realize this out, right? Okay, I will just skip this all because recently I've been very, very busy with my family members and Mother's Day and stuff like that. I'm going to go straight to the news right now. Okay, so Beijing loyalist John Lee will be the Hong Kong next leader. So we will see how it goes, but he won a very big vote, very big one. So that's why let's see whether the Hongkong, how they're going to actually get to do this. But more important now, China's Xi Jinping urges officials to resolutely fight those who question the zero COVID policy. Now, we saw in our national paper, and there was something about China abandoning this zero COVID policy, but no, apparently not. So they think that, right, in fact, President Xi Jinping headed a meeting of top leaders on Thursday that emphasized the country should stick to its dynamic zero COVID. Wow, okay. So again, you see that very, very different, yeah? All right. So now the thing is this, the Shanghai COVID cases, according to the latest this update this morning, they seem to be working. Apparently, the cases is going down, but the so-called lockdown persists. Now, I got some video that I captured this morning, but I have no time to bring it out to show it to you. Was actually employees in an Apple factory, and they were so locked down that they got crazy. So what happened? They fight their way out. I mean, hundreds of thousands, I think, fight their way out of the gantry. Very sad, very sad. They're just leaping over the gantries and then they just want to get out. So of course the police came, there was some fighting and stuff like that. It was pretty sad though, but this is how it is. When you clamp people down too long, right, people go crazy, I tell you that. So because of that, that's all right. Now Beijing kicked off another round of COVID tests as Shanghai postpones crucial examination. Now we all know that this examination is very, very important, but the capital Beijing, right, cannot allow this to continue to spread. And of course, Beijing now is trying to also avoid a potential lockdown because of all the ongoing problem. Yeah, it's pretty sad ongoing now. And at the same time now, around the world, CDC, nothing to do with China now, CDC is investigating 109 cases of severe hepatitis in children, oh my goodness, across 2 dozen states, all right? Now, I think we have seen this happening already in Japan. In fact, acute severe hepatitis in Japan has reached and getting problem. And the worst thing is this, in Singapore, we also have one, right? Not too sure, are they linked? But this is not good. We just finished COVID and now our kids having that problem. So you don't even notice that this is getting very stupid and getting very crazy here itself. I mean, I really wish that in whatever region you are in, please pray, give prayers and, you know, take care of your children, yourself. It seems that this world is going to end and keep on having a lot of problem going on. Yeah, very sad. So of course, if China is down, definitely the China performance will not be fantastic. And long time China bull Stephen Roach say that there's no way that Beijing will meet the 5.5 growth target. We all have heard Beijing coming out to 5.5%, but they say that, I mean, it's not possible. Even I will think it's not possible. Yeah, so Roach says that it could be a 4%, maybe lucky. I totally agree. Is Beijing, China, Beijing, Guangzhou, and Shanghai, all these are the main city of China. So if they are all having problem, and of course there's so many lockdowns across the board, it's not going to be good at all right? So please, it's something that you must think of that. Well, I just noticed that now you have 90 people online today. It seems like that's the reason why, right? When the market is bullish, people don't come online. When the market is bearish, I get to see more people coming online. Good, guys. Continue to bring your friends in. Let them know that I'm sharing some great stuff later. Right, let them to come in, yeah? So the problem now, I think the most important thing that everybody's watching out will be the war between Russia and Ukraine. Now, the thing is, you must understand today is the 9th of May, and it's a victory day in Russia. Now, this is not a victory day for the Russia-Ukraine war. It's actually the anniversary of the then Soviet Union defeat of the Nazi Germany in World War II. So it was what happened. During the World War II, it's all right. Soviet Union actually lost more than 26, oh my God, if I'm not wrong, correct me if I'm wrong, more than 20 million people, right, during the World War, right, one of the biggest casualty. So when they actually won over it itself, right, it was a very big victory. And of course, Putin, ever since coming into power, he has been making sure that 9th of May is a very important day. A lot of drills, flying of planes and stuff like that. But now we all know that, right, Putin himself is under a bit of health issue, and definitely with the current situation in Ukraine right now, right, it's going to be very, you need to be very careful. And you can see that right now, right, the tanks are all ready. Now, some people say that this is not just only a show, it's a mobilization. So I'm not too sure what's going on, but apparently, right, US defense ministers and officials are saying that, right, they feel that Russia is preparing, and they feel that, right, Russia is not going to go all out. So we don't know. We will see how it goes. But if things really go crazy, I think traders, you need to be very, very fast with your position in the market, yeah? All right, so some important information first to begin with. Now, first of all, this week we have a few important data coming up. Palantir is definitely one of them. I don't expect it to be good. In fact, I think it will be bad. All right, AMC, I'm quite sure it will be bad, even though there are some people going back to watch the movie. Then Peloton definitely be bad because definitely now people are going back to work. Now, OXY, yay, I'm very confident in this. In fact, I'm so bullish with this OXY, Occidental Petroleum. Yeah, I think this is going to be a very big company. I believe that this will go to $72 to as high as $80. Now, people who actually were freaking out back then as well when it go down to $50 I say that if you don't want to buy, you can just cut. But I'm saying that right, definitely I'm buying because I think it will go higher. Okay. Now, Walt Disney is expected to be down. This is going to punch the market heavier. Rivian is expected to be down because Rivian is the same. Is definitely one EV that I don't see is good. And of course, Amazon losing money on it will be worse. Beyond Meat, right, is also telling me that right people are not able to spend more for something that is good, probably. And after that, I don't see the rest. I recognize them. So I will not comment on the rest, but at least I can tell you now, other than OXY, I think remaining of them should be not doing very well. And of course, if they don't do well, it will have its dampening effect, especially on Walt Disney. Yeah, Walt Disney has a bit of weightage on this Dow Jones. If it doesn't do that well itself, right, definitely there will be some problem. Okay. All right, so the thing is this, as I can share with you, right, diesel fuel is in short supply right now as prices surge. Now, where is the diesel oil? Look at it. Now, the diesel oil have surged from the low end for about $2.50 to now more than $5. You see that? So this is because of the current inflation concern and also because of the current pandemic issue, supply issue, and most important now, it's going to hit, all right? It's going to hit. So this is something to take note of, very important, yeah? But of course, if you look at natural gas, right, you can see the entire flow is still not really that bad yet. But in terms of Fibonacci, we're looking at this figure at $9, which happens to be the resistance now. So if any time we break the $9, we can see it going up all the way to $10.79. Now, if actually it goes there, it's all right. It's just a matter of time. We're going to get hit in Singapore for petroleum gas, yeah? So you can see that the market has already broke the trend line. So that's why you can see it's producing and doing well. Okay. So all you can do is, first of all, kind of come back. And then if not, just watch out for all these important stuff. Right. Stock could see more turmoil in the next week because of the current situation. All right. Now for the CPI data and the bond market. Now, the thing is this, some people say, no, the market feel that, right, we have nowhere near the bottom. There could be more selling to go. So you can see that everybody got their own personal view in the market. Now, but some people say that, right, there'll be another 5% to 8% downside if the market key level breaks. What the key level? The key level to call, according to Wall Street itself, is 4,100 for S&P 500. So they're saying that if the S&P loses 4,100, there will be some selling, okay? There will be some selling. It's something similar to my 4096, right? So the currently now, right, the Singapore S&P equity risk premium shows that we are at a very low end, yeah, very low end. So all these information tells you that, right, the stock market is getting a little bit too much to bear, and traders are about to cut into capitulation period, yeah, fear and capitulation period. So let's watch what Mike Wilson has to say. Now, Mike Wilson is the one that I share with you, right? One of the second bear trader. The first one was Hunnert, right? I think that's from some one of the US bank. I can't remember that where he come from. But I'll share with you about what this Wilson has to say. All right, I've been following him, so I can share with you what Wilson said recently. Yeah, give me a minute, yeah. Okay, here we go.
So I'm not going to, get into a, battle with him about how the bond market traded. But what I would say is, I don't think anybody knows what the right, approach is here. As Steve was saying, they're behind the curve and they're trying to manage this thing. So we can always second guess, what they did after the fact and say that maybe this would have been better. But nobody knows that would have been better action. Okay, they're tightening. And they're tightening harder than we've seen since 1994. So that's pretty aggressive. And I'm going to, focus on the equity markets. That's just bad. I don't really care if it's 75. I don't care if it's 50. Right? They're squeezing the vice. And as a stock operator, I mean, it's just a tougher environment. I mean, today is really interesting to me, and it's been this way for a while, right? Rates have been going to the moon at the back end, and one of the best performing groups consistently has been utilities, okay? So stocks are interpreting this a lot differently. Stocks are interpreting this as if the Fed is maybe not behind the curve, because the bond market's already done the tightening for them. Via the mortgage market, via financial conditions, via the dollar, like the equity market is seeing a major slowdown ahead internally.
I mean, I'll give.
Okay, so basically it's all right. Mike Wilson is from this Morgan Stanley, and he's definitely not that comfortable with the current situation right now. He's one of the very few bear in the market, which I support because I can see that he is actually speaking the truth. All right. So the thing is, but at the same time, some asset managers say that it's time to buy. They say that now there are many opportunities to buy. So I feel that, right, you can go to defensive strategy to protect your portfolio and profit from this roller coaster market. So here are some ETF that people are offering to you, like Fidelity, MSCI and Healthcare, this iShare, MSCI, USA, Quality Factor, USA, ESG, select some of these, yeah? So these are the companies. And if you want to go for even broader market, like example, like this, like Wisdom Tree, High Dividend Fund, First Trust Morningstar, Dividend Leaders Index Fund, and Pacer US Cash Count, all right, 100 ETF. So basically, these are all the companies and ETFs that you can consider if you think that you need to have some protection, which I don't think so, because as long as you go short in the market, I think that's a pretty good idea already. But again, it's up to individual, yeah. So of course, our Jim Cramer is trying to tell people that, you know what, well, at this time now, we just have to be more careful. Now, Jim Cramer now says that, Jim Cramer says that right now the Federal Reserve fight against inflation will beat down formerly high-flying stocks. Well, Jim Cramer is one guy that I just have to laugh, like, yeah. Anyway, I'll play to you, right? Warren keep adding OXY. He's addicted. So am I. I'm also addicted to it. I think I will need to buy more OXY and keep it around. I'm also very addicted to it. Yeah, serious. Okay. All right. So let's see what Jim Cramer has to say regarding about this particular topic, which I got it for you. Yeah. Let's make sure it's louder a little bit. Yeah, Honor. The sound itself is coming from the direct source, so I'm trying my best to get it loud for you.
Is actually collateral damage in the Fed's fight against inflation? Or is it actually the key front in the fight against inflation? In other words, are stocks part of the inflation problem? Something the Fed needed to take aim at directly in order to cool things down and stabilize prices. And you feel that too, because I watch your portfolio. Either way, the market's going to keep getting hit because of this. I think the Fed will win the battle against inflation, but there could be even more downside for the averages in the process, especially if the capital markets remain hostile to IPOs and SPAC deals. We'll ultimately see fewer rapidly expanding startups and fewer jobs created. For a long time, it was very easy for businesses, good or bad, or even non-existent, to raise money on Wall Street. Powell took that away. It's no longer the case. So let's take a company like Shopify, because you know what I know. Software company helps small and medium-sized businesses set up their own e-commerce platforms. Second largest fulfillment house after Amazon. At the end of 2019, right before the pandemic, Shopify was a $397 stock. Then as the government threw money at small businesses and the Fed made it inanely easy for companies to borrow money, Shopify stock charged above $1,700 last fall. But ever since Jay Powell declared war on inflation in November, Shopify has fallen below where it was before the pandemic. I don't think Powell is deliberately trying to tamp down the irrational exuberance in specific stocks like a Shopify or today HubSpot or Toast or Bill.com. They're all legitimate companies. It's just that their valuations were way too high. And that froth helped fuel the overinflated IPO and SPAC bubble that I know Powell had to stop. Joe?
Okay, so okay, first of all, I don't cover Shopify, so I want to just take a look what just Jim Cramer has just said. Yeah, I don't cover this guy. I don't think it's like my cup of tea. But Shopify, let's take a look at this counter itself. Wow, my goodness. I didn't know that, no. Honestly, I didn't know that the share price really went up all the way to 1,700. Oh my goodness. Wow, 1,700 today itself is 377. My God, I mean, wow, if anybody have bought Shopify at 1,007 and still holding, I don't know how on earth in when time frame can we get to see this again. Maybe when it goes up to 1,700 again, the NASDAQ will be like 20,000 maybe. I mean, this is crazy. No wonder. This is nuts, man. God, right? This is where the pandemic happened in 2020, right? But the whole world thing that, Shopify will be the one that will become the next big one, like Amazon. And my goodness, gosh. I mean, serious. Now, all you can see is that now the volume has surged up the last few weeks. This is my weekly chart, by the way. And you can see that it's basically dumping at really crazy levels. Yeah, I mean, just keep on dumping. How low will this go? Well, it looks very clear that it's going for 300, I think. Going for 300, yeah. So it's still not a buy yet, yeah. So don't go and bother to be buying at discount. Oh my God, this is crazy. Oh, Liu, I also hope that he don't talk about OXY, but I'm quite sure he will talk about it. Yeah, I'm quite sure this Jim Cramer, Jim Crazy, Carey, gosh. This Sharif, you got me confused, yeah? Okay, so I'll leave it there. Okay, pretty good. All right, so now we're going to do some very alternate market news, and this is where all the G's come in. So stand by for a lot of stuff coming in. 2 PowerPoint slides for you, in fact. I think 2 PowerPoint files for you guys. Okay, let's go. Now, first of all, before you go into that, take note of this picture, my friends. We're going to have my May schedule right now. Today will be our basic live course. Today we do live trading and sharing. Then after that, right, this coming Saturday will be my 6th class for my basic. So if students or friends want to join us, so right, I mean, as in you get friends want to join us TWB, then tell them to come in and contact us through Facebook. We will get them in, and it will be on this coming 14th of this May on Saturday. Okay. Then of course, if you don't want to go for basic or go for premier, our premier class is up by 16 intake will be on the 21st of May and also on the 22nd of May. Now, our live trading for the basic class is on the 23rd. Then after that, our live trading for our 16 intake will be on the 31st. Okay, so pretty impactful week itself. When will we have a preview? Right, our preview will be here. Yes, our preview will be here. Okay, our preview will be on the 28th of May. Okay, what will be the content? I'll get back to you guys. But on the 28th of May will be our TWB preview. Okay, so if your friends want to join TWB, but they want to hear us out once again, then on 28th of May morning itself, right, will be our preview. Yeah, thank you very much once again for all the strong support. Thank you. All right, so now the thing is this, okay, there's a rub here itself, okay. Steve Henry was just thinking a radical thought. Perhaps some people or put people in charge of a world economy that actually have experience will be better, right? Because apparently the FOMC members, right, they don't have much jobs outside, apparently. So all these members are from Williams to Boller to George from Daly, to Evans to Bostic to Montgomery, all right, Black, all of them has no job outside Federal Reserve. Yeah, all their job is just to stay inside Federal Reserve. Okay, so what I'm trying to say is that, right, if you are putting members who have no job experience to go into to run the world economy, right, just to kind of thinking that how good would that be? Of course, it's a rub here for just being sarcastic here. So the reply was quite cool. Some profession can be wrong all the time and still get paid, like meteorologists, economists, financial analysts, right, politician. Right, it's more of a joke, yeah. Don't be upset, yeah. And of course, I remember telling you, right, when the Federal Reserve president was asked to sell off their so-called assets, right, you know, they sell near about the 4,800 price. Today, the S&P is at 4,100. So they sold like, you know, almost 15% higher than all of us now today. So that's why sometimes in life, right, it's not very fair, but it's ongoing right now. All right. So this is where I like this particular summary, which I think is very cool. First, we made the rich insanely rich. Okay. Then we showered the poor with inflation, which is what's happening right now. And now we are manufacturing a recession to slow down demand. Obviously, it's happening. And we are the US Federal Reserve, and we're here to help you. And vote for us. Oh, wait, you can't. I think it's a very good one. Yes, you can't vote for the Federal Reserve. They've been there. They are actually a private entity. Yes, a private entity. Got nothing to do with the US government. Yes, they are on a private entity. And yet they are really making the rich very rich. They are making the poor much poorer, as you can see. And of course, they seemingly do in a hand of manufacturing recession to so-called maintain this very incredible ecosystem. Think about this, all right? So this is where it all comes in. Now, why do I bring this in? Because now you can see this back last year itself. Now, last year, October, when the TMC GDP result was above 200%, I was very, very blatant. I was saying this. The moment the Federal Reserve stopped doing any more pumping, I'm very sure by November last year, the market will probably see a peak soon. And of course, in January this year, I said already, right, the market will fall. So all these were part and parcel of what I shared back then. And to date now, we are seeing the market really turning down. As you can see now, it's turning down. But the problem is this, you will notice that the amount of money that the Federal Reserve is putting in and the way the market is going up, right, is almost directly linked. Okay, so that means that, right, the stock market here is now, right, very crazy is the distance between them is still pretty far away. Usually they are very intertwined, right? Can you see that they link itself very, but ever since here, it opened up a little bit, a bit of decouple a bit here. So now if they say they want to link back together again and what have been happening over the last 30, 40 years, then that means that the stock market must come down by at least another 10 to 15%, another 10 to 15%, then we may be able to get them, these two lines come together. So the question is it possible? Well, is it really possible? I'll let you decide, not me, okay? Now, we can see right now, right, what happening is this. Back in 1973 to 1975, the stock market actually plummeted because there was no support from Federal Reserve. So if history is to go back to what happened in 1973 to 1975, where Paul Volcker was around, that means the stock market actually plummeted more than 20 to 30% back then. So would that be happening? Well, I think it is very possible if the Federal Reserve really has the tenacity to do what they're supposed to do. Yeah. All right. So now this is where I want to share some stuff with you. Okay. Last night at about 10 p.m., I was with a group of students and we talked about what I potentially see in the US crude oil. And the US crude oil was trading about 109 back then. I mean, as of Friday. And I said this, well, if you look at the chart, you will notice that the 147 was the high back then in 2009. Okay, and the thing is this, at the time when that happened itself, right, was because the dollar was actually depreciating in value. But now the crude oil is still going up and there's no depreciating of the dollar, but in fact it's appreciating, and yet already at 110. So I cannot imagine if later on itself, right, there will be a point whereby the dollar may pull back a little bit and this may pump the crude oil price all the way. And of course, 147 was a touch and go level. As a trader, imagine if you have shorted the market somewhere around here, most likely you will also put your stop loss around 147, right? And if the liquidity is getting thin, then I can just safely say if any time, any unfortunate thing may happen, like a war, or maybe someone's death, or something happen in the country, we may see the sudden surge of crude oil price to 150. Okay, it may go there, and then what happened? When it goes there itself, right, you're going to get slumped, you're going to get freaked out yourself, yeah? So I think that this might be happening. I'll talk about this more later, right? So what made me think that the thing will happen like this? What is the main driver? Let me just bring to you what I shared yesterday, yeah? Just give me a moment. Okay, so first of all, right, this is the, you can see on the screen right now. Okay, this is the Dow Jones versus the 10-year real yield, but inverted. Now, inverted means that they inverted the chart. If let's say they will do the normal when the yield is going up and the Dow is coming down, right? Some people cannot feel it because it's too far away. They cannot really picture it. So this particular chartist, they inverted the chart, so you can see that the impact is there. So now the thing is the same thing, right? You can see that all along itself, the Dow Jones and the yields are moving very hand in hand together. But it was only like in this year, March itself, right? It so-called decoupled a little bit. Okay, now let's say things go back to normal again. Now, what must happen? Well, that means that the Dow Jones has to go down by 30,000. My goodness, the Dow Jones now is trading at 32,500 already, very taxing for you to come down. Imagine you go down to 30,000. Oh my goodness, how many? You're gonna freak out a lot of people, right? So that's the reason why I felt that, right, things may really happen for a reason. Yeah, first one. Second, now this is where it gets very scary. Everybody, you notice that now, right, the Bitcoin and the NASDAQ is very, very intertwined, which means that how the Bitcoin move, right, will be almost how the NASDAQ will move. So the thing is this, the relationship itself is more than 90 or 0.9. So this is actually a work telling us that, right, if the Bitcoin is to go down lower, then naturally the NASDAQ will have to go down lower. Do you understand my point? Because now the Bitcoin is really the one that's seemingly leading. And of course, Bitcoin have just lost the 34,000 level. And I suspect that it may go down to 32,000. And this again, that will create more problem for the NASDAQ. Yeah. Now, of course, we know that one of the bigger buyer on this Bitcoin is definitely MicroStrategy. They have to maintain, because if they don't, the downside itself will be very scary. All right. In fact, right, this is where it gets really bad. Yeah. Now, why am I confident that crude oil price may be going higher? Well, the reason is because the Biden SPR exercise has been dumping oil down, right? But you can see the market have been buying up. They've been buying up and been saying thankful to Mr. Joe Biden. So if the thing is this, if currently the price is even higher than this Biden SPR, there's two ways out here. One, he stopped doing it because he knows that he's losing battle and the crude oil price will go by itself. Two, he has to come in very heavy or twice the strength to bring down the oil prices, which I think is very difficult. I don't think it's very even possible for him to do that because people are just buying, taking advantage of his lower price. So this is one, and of course now Russia have accepted the Europe side itself, right? Some of them are looking at to take on the Russia crude oil, and that really spooked some of the European countries. Yeah. So now look at this. Does this look like any country that has sanctioned or problem or in war and the US government is going after it? Yes, on the day when it happened, right, the ruble actually came down quite a fair bit, quite bad. But at the same time, when it actually bottomed, right, about twice this timing itself, right, straight away now the rubles are trading above the actual, the previous before the war battle. So the question is this: do you think that Russia is actually losing this battle? Somehow it doesn't show that Russia is losing, right? It seems that Russia is winning. So again, this actually create a lot of bubbles in my mind because, right, when you see this, right, we have a bit of problem here. Now, this is the net percentage of central bank tightening. The last time when this happened itself, and it was very 08, it was 08 period. Now it's already back to 2022 period. We're not even near there yet. And the thing is that we are near the same level. So the question will come in, right, is that how much more will this happen? Because once the tightening is there, you notice that after that, the market will lose the tightening. And that is where usually itself, right, things will change over. So, but until then, at the moment right now, it does shows that, right, the chance of with tightening down at a high level, right, the market is still like that. You must be very crazy, must be very careful, yeah? All right, now, most important thing is this. I'm gonna share you what I just showed the margin depth earlier. Now, this one thing from a YouTuber. Now, she is staying in Canada, and she updated through this thing and said that, right, do you know that there are 3,067 ETF in US? But the crazy part of last Friday is all right, more than 2,460 ETF are in red. Now imagine ETF is built on one simple model, right? You build on me, I build on you, and so forth. So that's why now imagine that if everybody is doing high leverage building, then this will actually become a problem because once this funds that any form of like underperforming or want to do, change over, the market must sell first, man. So all these problems itself is going to come in, and of course, if this is going to continue, this is going to be very, very bad. So that's why this guy Scott, right? Scott is a very well-liked CNBC correspondent. He said this: "I'm told from someone senior at a major firm that selling is primarily being driven by 12 billion to 15 billion of leveraged ETF funds into the close. Most of it say it's with NASDAQ, all right? So once again, we're not too sure what happened, but it seems that, right, the selling is genuine. So you can see now, recent magnetic picture, right? Now, every time when there's a bear market, it may last as long as 630 days. It may last as short as 33 days, okay? But on average itself, very important now, the market will be down by at least 35 to 32% now. So to put a smaller number itself, right, it's 32. That means that, right, if ever there will be a selling the market, right, the market may lose 32%, okay? Now, at the moment now, the fear greed index on CNN has changed a little bit, looks much better, more professional, and the current level now is at 31. Now, it's not anywhere near the 25 area, so it's still pretty okay. All right, now, of course, you put in VIX, right? This is the VIX new methodology versus the VIX index. 97, it's currently at 97. Every time when the VIX go to 1.3, you can see almost identically that will be the bottom of the market. So to me, is that if ever you can see this number going to 1.3, then definitely it will be a very good time to buy stocks. But when that happens, then we just do it. Okay, all right. So this again telling you that why itself, right? The market is still not at the bottom yet. We are near the bottom, but not at the bottom yet. Yeah. So again, very, very important information that we share with you. All right, so at the moment now, right, this retail level, right, are getting a bit of bearish and bullish, but let me just share this with you, my friends. Until I see this whole taken out, right, until, okay, wrong color, until, right, I see this, you know, yeah. Yeah. Until I see, wait a minute. Right, hold on, something went wrong. Okay, until you can see green here itself, and it's like 70% or more, okay, at least 70% or more. All right, then we can actually see the market really very bearish, and then that is where to buy. But now we only have 52.9. I don't think the pain is enough yet. I don't think so. Okay, so now this is the bear market without a recession. It's very rare. So those you can see majority of the time there will be recession, and because we have one recently back in this 2020 during the pandemic time. Yeah. Okay, so watch out for all these numbers. It shows that 20 to 30% to drop is really, really possible based on the past history, guys. Don't you think that this is a very fantastic MAO? You don't need to dig it out anymore. You can know what exactly to do itself, right? Good. Yeah. Okay. All right. So now the thing is this, but the season earnings seem to be okay, right? Now, last week itself, right, 1,112 data earnings has beat the Wall Street, only about 415 misses it. So, well, it seems to be good, right? Yeah, economy-wise, maybe some companies are doing better, but I just feel that, right, the whole thing is still not there for me to spend money. So this is something interesting, and that's the reason why am I telling you my view on crude oil will likely be going higher. And of course, if crude oil goes higher, it will hit the market once again. All right, so got it, guys. This is the reason why we want you to take a look on this. And of course, I'm quite sure you might have enjoyed this MAO, right? Because it's pretty cool with all this information, yeah? Okay, so guys, if you like what I just shared, it's all right, just tell me, just put away thank you. That will be fantastic for me, okay? Okay, all right. Okay, so let's now go back into our chart. Hold on. Okay, let's go. The bull goes boo, the bear goes grr, and the lemming go is different this time. Okay, let's go. Oops, there's some technical issue here. Hold on, yeah. Just give me 1 minute. All right, so meanwhile, while waiting for my AIMS platform to be up itself, right, guys? Today, definitely let's take note of that. Today is the victory day. We have to be very, very careful. I don't know what Putin will do. Also, at the same time itself, right, in my opinion, I believe that the crude oil price will definitely be going higher because we are getting more and more problem across the whole world. And last but not least, undeniable, okay, very important is this, all right? Traders, right, majority of traders are still very optimistic in the market. That is the problem here. Okay, so let's look at the charts right now. China market is not doing well at all. Yes, today the Hong Kong market is closed because of Vesak Day. I'm doing due to what holiday was that? That's a holiday for Hong Kong. Sorry, can't remember that day. Ah, gosh, suddenly just can't remember that. Okay, why you're telling me so early? I haven't finished yet. Okay, let's continue the charts here. Okay, now Hong Kong, China market is down today. You can see it's a gap down and very clear. This is the MLP of the chart, right? Very clear. It's below the MLP. And now the market took resistance against it and now it's traveling lower. All right, so to me, it's all right. It should be able to come down to here to finish up the chocolate bar. So 12,630 will be a level to watch out for the China market. Okay, so more selling to go. Now, in terms of the Dow Jones, let's take a look right now, the Dow Jones. Now, the Dow Jones today, we are looking at it for two angles. Now, angle one is that the Dow Jones now you're having is a CCYR on the Dow Jones day chart. Okay, the market MA 200, MA 30, MLP are all on top of it. So the market is very bearish. All right, and the KSI is red in color and it's uptick rate, so it's also very bearish. Ah, correct. Birthday, Buddha birthday. Yeah, thank you, Liu, for remembering that. Okay, so now everybody take a look on this here. There's a number to watch out for. This is the thing that I told you, right? This one is 32,243. Okay. Now, this is very important information. Now, watch, yeah? This is the BMB SL, right? The market pulls back then over here. So let me reset the counting of day. Now, this is day number 1, okay? This is day number 2, okay? So by right, if let's say we follow what we said before, usually it takes about 3 days to 4 days for it to reach the extension 1 times 1 or minus 1 times 1. So now the Dow Jones is at 32,583. Now, I cannot guarantee, but I'm confident to say that, right, if nothing changes, the next 2 days, either today or tomorrow, we are going to see this figure, 32,243. Oh my goodness. Okay, that means that from where we are right now to now, the current price, right, it could mean the total targeted price is about 350 points, 40 points, yeah, about 340 points. My God, that's a lot of money. If the market really go down to this figure, 32,243, that's about 340 points, and that's $340 US for one single contract. If you do 10 contracts, it's going to be $3,000 US. So I don't know, maybe not. I don't know, can't guarantee you this, but I'm kind of confident to say that, right, we may be able to see this. Right, we may be able to see this. So traders, is all right, please take note, yeah, there is a possibility for this to actually happen. And of course, if the market really goes there, it will be another great day for all of us, okay, another great day. And of course, we have pivot 2 at the moment, the market might be sucked down to this point itself, so we need to watch it, okay? All right, so that's the Dow Jones. The NASDAQ. The NASDAQ is also almost the same thing here. The moving average itself is all above us. MLP also is very bearish. KSI has turned from green to red, so it's bearish. So which means that, right, there is a possibility to see $12,218, 12,218 points. At the moment now, right, at the same time, you notice that, right, we are, the KCBs and the pivots are all linked together. So this is quite cool. The market may be attracted downwards, right, within the next 2-3 days, because this is day number 1 and this is currently day number 2. So maybe the NASDAQ may need one more day or so to come down to 12,218. Yeah, need more time. S&P 500 also has the same thing right now. S&P 500, right? The KCB and the pivot 2 are almost identical. So that means that the market may have a possibility to see this about 4026. But of course, this will be long because once it goes down further, that means that the market may come down all the way to this price at 39.76, which is a minus 1 times 1, which actually very coincide with the KCB at 39.77. So they're very, very nearby. So S&P 500 might be able to come down all the way here. The only thing is this, the KSI is green, yeah? So that's why the downside will be limited. Okay, very limited. It may be limited, yeah? Traders take note of that. Hang Seng is closed. Now, Nikkei today fell. Now, yes, 2 days ago, I was saying Nikkei will go up. It went up. Now, today, must take note that today is a DJDD for this Nikkei. So if the DJDD moving averages is on top of you and the market just triggered MLP and fall, then that means that it will be selling. It will be selling. And the KSI is red, uptick red, more selling. Now it break pivot 2, confirm sell. So how low would it go? Well, it can go down to 25,766. That means that the Nikkei can come down all the way to 25,766, which is now, if we compare notes itself, right, it's very far away. So there's almost like 750 points away. Okay, so let's see how it goes from down there. So Nikkei, yeah. Okay, so DJDD means it's a single direction day. KSI rate means it's more like it can go through. And of course, the downside can be the same number at 25,766 level. Yeah, watch out for that. Nikkei. Now for DAX, right, I already told you DAX will continue to fall and DAX really fell. So my view is this DAX should be able to come down to here at 13,266. Now the KSI is still green, but I told you before, guys, that the market has to follow through. All right, so yesterday the market loses pivot 2. Below pivot 2, no matter how below OP, CCYR is a sell. The only thing is this, towards the end there was some recovery, but then after that market just continued to fall later on. Yeah, so this one, watch out for this. I believe that the DAX will be able to hit the BMP minus 1 times 1. Now, of course, crude oil is really my favorite, and now I tell you why am I liking it so much. First of all, it's above 2 MA, it's above MA 30, above MA 200, and now it's just momentarily go past MLP. Now, MLP, as you know, we learned before that if the market touches MLP and rebound, it's actually a strong buy, right? Remember, a strong buy. So you can see now the market opens here, okay, and then it came down to MLP, trigger, but no color change. And now once it crossed above it, color change have from red to yellow. So that's why I suspect that crude oil could be going up. Okay, I'm still looking at 110.63 to really happen. Yeah, 110.63. Okay, so going back again. Sorry. All right, going back to the crude oil, right? Now, crude oil day chart itself, right? The KSI is green and it's uptick, so that means there'll be further upside. That's why buying cheap is very important. What you can see now, right? The market KSI is green, so once you come to KTR -2 or -3, it's a steal to buy. See that? Very good trading, yeah? Okay, so now the thing is this, while high, we're expecting to go. First of all, let's cross 109.76 first, because that is the very strong KCB, and I think that the market itself might be using this as a guidance. All right, anything higher than that, it may be going up higher to 111 area. Okay, so let's just take a look later on. All right, so done with the this crude oil. I still think that it will go higher. All right, in terms of asking me how high, I already tell you, right? I'm just gonna buy some crude oil, hold it, and then slowly go up. I don't know how long will it take, but I'm not in a big hurry. So let's see how it goes. All right, at the same time now, gold prices. Let's take a look on gold prices now. Gold earlier. Okay, now gold, as you can see now, gold is not good. Gold KSI is red and its uptick means selling is going to come in. KCX blue are still available, so that means the selling is still to come in. And of course, very important, you have just rejected MLP, meaning you go below MLP, so that means that we're going to see some selling. Okay, so how low would it be going? The first target itself will be 1859. All right, so to basically see how low can it go. If we go down to 1859, then we will be triggering pivot 2, right? Then of course it may go even lower. Okay, we go even lower. All right, so for me, right, I think that gold will be a better buy at 18. All right, 1826. All right, now for gold, the chart is something very important. If I look at the chart a bit smaller, now first on what I'm seeing right now in terms of technical, right? After so many years in the market, you can see right now there's a technical point on gold, very, very strong. So if gold price is to come down, maybe hit this junction here, that will be somewhere 1781, yeah. So maybe if you say 1781. There is some problem with my thing here. Okay, 1781 will be the entry point of it. All right, if I say price do come down to this point, then it'll be bottoming out for the next big rally coming. Okay, so watch out for this 1781. It's very far away, so we have to be alone. Yeah. Okay, and then I have silver. Silver also about the same thing. All right. Okay. Okay, so silver may have to go down lower to about $21.25 just to, do that, because the silver price is still on the way down and the boys are still selling. KCX is still holding. So that means that silver may need to go down to $21.25 for it to stabilize. Okay, last two before we go. Bitcoin. Now, Bitcoin, I told you it will go down lower, and it's really happening. Oh my God. Bitcoin now is at 33,800. We went down to 33,255 earlier, moments ago. Yeah. Okay, KSI is red, green bars are out. So how to interpret that? That means that the market is near a bottom. It's still not the bottom yet. You can actually, expect it to may go lower. That's what we want. All right. So of course, if the KSI rate and the market is still within the two pivot, right? If someone want to get up from here itself, right, you must just take note that there will be some penalty in between. So you can see over here for Bitcoin, right? So 1 day from the BNB 1, 2, 3, but this one is not halted holiday, right? 3. So by the third day, right, the BNB was given very nicely for the TWB student. Okay, so that is the Bitcoin. So I expect the market to go down lower to 31,000, and let's just check Ethereum. Ethereum just beautifully has just touched the pivot 2 beautifully. All right, very good. And after that, what happened? 1 day, 2 day, 3 day, for 4 days, the market hits. Okay. So with all this information in your hand phone right now, you should notice that Ethereum has just hit the 24, 23 level perfectly. Will it go lower? Yes, I think it will. So 22.42 will be my ETF level. All right, okay. This is one thing to watch out for. 22.42 level. It's going to be a very important level for most traders, yeah. Okay. All right. So with that, guys, I want to share this with you before you go about the US counters. Just give me a moment to just share this with you an extra note here itself. People have been asking me my view on this OXY. I already tell you, I believe that OXY will likely go higher. I'm still very bullish on this particular counter. I think that OXY has the potential to really go up towards $72. Okay, OXY. Yeah, my long-term target itself is 80. Where are we now? We are now at 64. Okay, so this is my first thing for you. Now, next one will be Tesla. I know that a lot of Tesla fans are in the market, but I'm not comfortable with Tesla. And I already tell you, right, in my opinion, itself, Tesla should be coming down towards my 777 level, which happened to be the 78.6. All right. So to me, Tesla should be coming down to 777. Okay. All right. Then of course the next one will be the sorry, my bad. Next one will be on Netflix. Now I told you Netflix will go below 200, and it really went down below 200. How low would it go? Well, there's some buying interest at the moment, but I still think Netflix will still be going down to about 160 range. Okay, 160. Now all this number that I'm giving itself, right, is not to say that it will go there and bottom out. I just say that it might be going down because of the current situation now in America. Okay, so I think more downside. Please don't jump in to buy. Okay, not now. Apple. Now, Apple is trying its best to retaliate the downside. You can see the strong support. There's a strong support around this area at 155. But I still think that Apple will be coming down to 150 to 143 in the near term. Now, if Apple can come down to 143, I think it'll be a very good steal here at 143, okay? Now, 143 will be where the last base was. I think that this is where it will likely be also bottoming out, the 143 level. Okay, so that is the Apple, and of course we have other counters like Amazon. One here. Now Amazon has been coming down really badly. It's at 2295. I think that it will still continue to go down to about 2050. Okay. I think maybe when Amazon hit this point 2050, it will be a better buy by then itself. Now, of course, RSI wise is very low. There are some expectation of rebound soon. I can't deny this, but anytime if Amazon can come down to 2050, I think I'll be much more happier. Okay, and last one will be on Meta. Now, Meta is Facebook, and Meta, in my opinion, is all right. Recently, the earnings was good, but you can see the market slowed down. I believe that it's going to retest again to 168. To me, it's all right. 168 is still my target for Meta. Okay, all right. So that will be all. Alibaba. Okay, let's do Alibaba for you. Okay, everyone. Yeah. Now, I really think that you should avoid Alibaba right now. Really, I don't know why are you buying, but I just tell you that it's best to just leave it a miss. Now, this is Alibaba in America. It's at now $90 already. I believe they're going to go down to at least $75. I'm not kidding you. I think that $75 will be the target that I'm looking at for Alibaba share. So that is the Alibaba shares in US. You want Alibaba in Hong Kong? Wait a minute. Hong Kong want to be. For Hong Kong Alibaba, right, I believe that, right, it's going to go down also at the same point, like in the same thing, down to $75. Okay, so about the same. Okay, so they should move the same way anyway. All right. So with that, that will be all for today. I'm still pretty bearish. I still think that crude will go higher. I still think that gold will go lower. I think that, right, traders shouldn't be jumping in the market. By maybe Wednesday or Thursday, we can see more movement from the CPI data, and then we see whether the market will follow through or not. Okay, guys, thank you very much for today. Thank you. I hope you guys will make a lot of money. For those who want to join the Cal I Want In group itself, right, quickly contact me after you watch the video, okay? All right, no watching a video, you're not allowed to come in. Okay, that we all. Bye-bye.